Can you see the file?
Yes, sir. It's visible, sir.
Yeah. Okay.
Okay. Thank you, sir. Shall we
Welcome.
start now?
Yeah.
Okay. On behalf of Professional Development Committee of the Western India Regional Council, the Institute of Cost Accountants of India, I welcome all of you for the second session of the webinar series for UPSC ICOS preparation for newly qualified cost accountants. Our today's topic is cost control and cost reduction, cost control techniques, standard costing, variance analysis, budget and budgetary control. Our today's speaker is CMA Milind Date sir. Sir is a fellow member of the Institute of Cost Accountants of India. Also, he is a MCOM, FCMA, CMA USA, and certified independent director and member of IOD. He is also completed diploma in IFRS, ACCA UK. He is having a more than 25 years of industry experience in field of accounting, finance, strategic management, financial management, ERP system implementation, performance management. Also 13 years plus experience in training and educational sector. Currently, sir, associate with ISDC as a director learning and development. Over a 10,000 hours of training done on vast business and accounting areas such as IFRS, strategy, financial and performance management. Also trained over 3,000 faculty members in colleges and universities to engage dialogue on recent trends in the business world. Welcome, sir. Now I request sir to kindly start the session, sir. Please.
Thank you very much, and a very, very good evening to all the participants in this session. I hope the screen shared by me is visible to everyone,
Yes, sir. Yes,
and
it's
and my
visible, sir.
and my audio is also clear to you all.
Yes, sir. Yes, sir.
Yeah. Thank you.
Thank you, sir.
So thank you, ma'am, very much for introducing me. Before I begin today's session, just one request to you all. Please mute your audio so that there is no disruption in the network. Thank you so much. Now, as you would have heard from ma'am, that today's session is going to be devoted to discuss some of the aspects of cost control and cost reduction. All of you are certainly qualified CMAs. So today's session is not a teaching session as such. What we will do is we will just keep revising from what we have learned. And then I will, enlighten you on how the uh, Indian Cost Accounting Service examination questions are generally set. And then I'll illustrate some of those questions and we'll, try to jointly solve them. So that's going to be the methodology. And in the end, of course, if there are questions from you, I'll be happy to tackle them. So let's begin with today's session on cost control and cost reduction. We will typically have the scope of the discussion uh, limited to cost control techniques, standard costing, variance analysis, budgets and budgetary control. So what I'm going to do over the next hour and a half is to, you know, tell you how is this Indian Cost Accounting Service examination conducted? How is it different from our CMA examination? Of course, I'll be providing only general guidance to you, not in depth, because that will be available to you through various notifications received from the authorities. We will then, of course, talk about concepts of cost control and cost reduction. What are the objectives, approaches, and time frame regarding both? We will also deal with some of the benefits, challenges, and tools and techniques that are generally used in the industry in terms of budgets, budgetary control, standard costing, and variance analysis. And then that will be followed by a question and answer session. If you have questions at the end of the session, I can tackle them one by one. Then I'll let you unmute yourself subsequently and ask those questions. Till such time, I request you to keep noting down your questions or queries, and then we can ask them. Or you could also keep them ready, typing it out into the chat box. Let us begin this session. Uh, as I said, to begin with, this examination, I'm really very happy that young people like you who have recently qualified as CMAs have shown keen interest in this qualification, which will help you to get uh, good exposure, good jobs, good career opportunities in the government sector. And mind you, it is really going to be challenging. The first hurdle that you have to cross, though, is the 2 hours examination. Now, this examination would be a bit different from our CMA examination, which was a combination of, objective type questions and then descriptive or numerical ability testing questions. This exam is only going to test you by asking you objective type questions. And it's a 2 hour exam, total 300 marks. All questions will carry equal marks. That's what they say. But there is a catch here. And that catch is what you should be aware of and prepare yourself accordingly. And I'm going to, guide you through the learning pedagogy which you all should use at the end of my session today. But just a warning to you all to begin with is that there is a negative marking in this examination. For every wrong answer, 1/3 of the marks will be deducted. So if a question carries 3 marks and you get the answer wrong, 1/3, that means 1 mark will be deducted. It's a negative mark. I think someone's mic is not on mute. I request to keep the mics on mute, please, because I'm getting disrupted. Thank you. Thank you so much. So please make sure that you, although might have prepared for your CMA examination very well, the way it was tested was totally different. Now it's going to be different. So probably you will have to recall all your knowledge, previous knowledge, and make sure that you learn it for this exam in a bit different way. I'm still getting disturbed by the unmuted people. Would you please take care to mute yourself?
Yes, sir.
Thank you. So, let again, just keep yourself on mute now and then speak. No problem. Okay. So let's start with the concepts of cost control and cost reduction. Of course, they are terminologies, and they both aim at managing and optimizing costs. We all know, we have learned through the CMA course that costs are nothing but monetary values of resources that are consumed in any business activity. And you should remember that although major focus of our course is on manufacturing type of business, the entire world today, including India, uh, it's secondary role that manufacturing plays to service industry. So when you are learning, your learning should be such that it's applicable equally to manufacturing as well as service oriented business organizations. because that's how you will actually be able to work once you clear this examination and subsequent processes. So know very well that the objective of both these techniques, cost control as well as cost reduction, they aim to manage costs for an organization. When it comes to government departments, ministries, public sector units, it sits at a very, very high level of cost optimization, cost management, because then it's not only limited to economic management and optimization, but even socio economic costs are to be managed and optimized. So whenever you are going to apply these concepts in real life scenario, you please make sure that it's not a limited view of cost that you take, but a holistic approach is taken by you. For you, it's no longer going to be just material, labor, overhead kind of a thing, but it's every other type of cost as well, which would be visible, which would be traceable, and then only it can be managed and optimized by you. There is a saying, whatever you can measure, you can manage. And if you are not able to measure your costs properly, you will never be able to control them. You will never be able to reduce them. And that's why these two in real life scenario become one of the most crucial roles that a CMA is going to play: cost control as well as reduction. There is a subtle difference between the two, and we will see as we go along. So let us talk about cost control first and then cost reduction. When we talk about controlling, it means regulating. You regulate your cost. And when you want to regulate your cost, it's like, regulation within a certain predetermined limits. Now, you may call these limits as budgets, as targets, as standards, give it any name. But once you set a certain limit for yourself, you try and manage that your cost spend are within those limits always. That should be our effort, that should be our endeavor, and that's the objective of cost control. The approach that is used to manage the costs or regulate the costs is by monitoring or regulating the resources that are used. Because as I said earlier, uh, for controlling cost, you must control use of resources. These resources could be tangible as well as intangible. And in these days of technological advancements, which are happening almost on a daily basis, there is a lot of challenge when you talk about managing or regulating use of resources. Your processes within the organization need to be optimized, and you need to develop a framework whereby you adhere very strictly to the norms or standards or the budgets or the targets that you set for your organization as a whole, as well as different activities, different functions, different departments, different roles that uh, play their part in the entire business model of an organization. So the focus of cost control is uh, is a disciplined approach, and it's a continuous process, as you can say. So if you want to look at cost control on these three parameters of objective, approach, and time frame, you will realize that it's nothing but regulating, disciplining yourself when it comes to consuming resources, which are scarce, of course, and they have costs attached there too. The effort of cost control is obviously not directed to reduce them. And therefore, the other technique that is used is cost reduction technique. It's fundamentally an effort made either to reduce the quantum of resources, thereby you automatically stand to reduce the cost, or on the other hand, try and negotiate the monetary values in such a way that you reduce cost of purchasing, cost of consuming, cost of keeping in the inventory, cost of engaging your labor, cost of engaging other services, etc., etc. So, as different from cost control, which is regulation, the cost reduction is naturally going to aim at reducing the per unit cost. Of course, in every effort that one makes to reduce cost, you can't compromise the quality. Quality has to be maintained, or quality, in fact, nowadays will have to be improved. So the approach that you have to take is to maintain quality while you are reducing cost. And that therefore can be done when you try and identify activities, processes that do not create value for your organization. And when you try and identify them, the next logical step would be to eliminate those activities or automate those activities or just outsource those activities so that you will be in a position to reduce your total spending. Whereas cost control can be said to be an operational level of activity, cost reduction actually is a strategic initiative. And once you are able to carry on this initiative in the best possible manner, you can reap sustainable benefits for your uh, organization and for all your stakeholders who would be sharing those benefits created by your organization, created by the value generated by your organization. So obviously, uh, although the difference between the two is not substantial, it's specific, and therefore you may need different skill sets uh, to carry out both these functions, the cost control as well as cost reduction. But what does it bring to the stakeholders of any organization? Let's look at some of the benefits. Benefits in terms of cost control. First of all, it helps you obviously to prevent overspending because you try and regulate it, optimize it within the set limits. So it will help you avoid overspending. Because overspending is, sort of avoided, it brings financial stability to the organization. And that's very, very crucial, especially in terms of crisis, economic downturn. And you can see everywhere, whenever there is an economic downturn facing any organization or facing any country for that matter, the first thing that everyone starts talking about is reducing costs, is controlling costs. And what can be controlled best in such circumstances? The costs that can be controlled are those which can be easily controlled by executive action. I mean, expenses like travel can be easily controlled by just one circular. Nobody is going to travel. And the entire world had witnessed it 3-4 years ago when the world was stuck with the pandemic. Many countries and many organizations within those countries resorted to cost control methods. Remember, these were not cost reduction methods much, but more of cost control methods. That's the benefit that the entire world got out of it. And obviously, when you try and prevent overspending, bring financial stability to the organization, obviously, you tend to improve your profitability. You tend to optimize utilization of resources. You definitely try and reduce wastages. And once the organizations start doing that, the organization can gain competitive advantage. And if CMAs like us, you know, through our actions, create that competitive advantage for the organization for whom you work, obviously you create an extra value add for your organization. And once the company demonstrates that it's doing so, obviously the investor confidence will be on the rise, and that will again help company to get long-term sustainability. So prevention of overspending, bringing financial stability, improving profits, optimizing resource utilization, getting competitive edge, raising investor confidence, and long-term sustainability, that are major advantages with cost control as a technique. Of course, for being able to control the costs, you first must be able to measure and trace the costs, make them visible to you and your management. So once the visibility or traceability comes, control becomes little easier. You have to have a disciplined approach, no doubt about it. You may be facing challenges due to reasons which are not within our control at times. Take, for example, if you're working in a public sector undertaking like ONGC, which is an oil and natural gas company, obviously the profitability of the company will be hit hard because of the uh, highly volatile oil prices of the world. So there, things are not within your control. But then, if you're going to get hit on one side, control aspect on the others will still enable you to maintain the cost discipline. Never be extravagant when you try and spend money in such organizations. Cost reduction, on the other hand, so whereas cost control is holistically looked at, cost reduction is naturally specific to bring about operational efficiencies, how one can reduce cost per unit. And therefore, whenever we talk about cost reductions, the focus is more on direct costs rather than indirect cost, whereas focus of cost control is more on overheads. We can say that cost reduction is more to do with direct costs, which can be directly attributable either to units of product or to activities that are performed to uh, produce a product or a service. So reduction will have to do more with operational efficiencies. Of course, you whatever money you save naturally can be used in funding your growth, in making new investments, bringing in new technology, which will further help to reduce costs. And once you achieve a certain level of cost reduction, naturally you help companies to improve their financial health. Or in the language of strategic management, I can very well say that your company can become a cost leader company. And cost leadership is a very difficult strategy to pursue, but companies who have succeeded well in establishing as cost leaders, they are the most profitable companies. And naturally, if they are able to reduce cost to the bare minimum possible, they create extra value for customers. So customers' satisfaction can also grow a lot. And therefore you gain their loyalty, you gain repeat customers, which will lead you to be sustainable in your growth objectives. Employees will remain engaged and loyal to you, so employee satisfaction index also can go up. And the most crucial thing, of course, is that your cash flows tend to improve. So on the whole, if you see, cost control and cost reduction both aim at bringing benefits to organization, whereas controlling means overall managing and regulating your costs. Reduction focusing more on reducing per unit costs. Both together will bring tremendous advantages. And therefore, CMAs must try and use various tools and techniques which are related to both of them. You know, there are traditional tools like standard costing, budgeting, which are still in vogue, no doubt. They are not outdated anymore. Organizations still use budgeting, countries still use budgeting, and even the uh, governments also make efforts to use tools and techniques to help them reduce costs uh, in production of goods or even services. So while there are traditional tools, there are also modern tools which can be made use of. So I will focus today mainly on the traditional tools of budgeting and standard costing, but I'll make a reference to some of the tools that are modern uh, comparatively and which we can discuss at a future date. So cost control tools, as I said, basically could be budgeting, standard costing. These are normal ones. And even exam will focus on that, no doubt. But when we said that cost control is regulating cost at a predetermined limit, benchmarking is one of the modern ways of controlling your costs. And you benchmark your costs with whom? Benchmark your cost either with your competitors or the industry average as such. Obviously, for benchmarking, external data availability and that to accurate data availability is one of the challenges. If you see, budgeting or standard costing are internalized tools, whereas benchmarking, your own data will obviously be available to you, but data for comparison, your competitors, your industry average is rather difficult to get. So benchmarking is one of the cost control tools. Negotiations. When it comes to rates, rates of items or material or space or consumables which you buy, bought out components, very hard negotiations will have to be carried out. And negotiations are not a one-time exercise. You will have to keep doing it. So even negotiations with labor union to control your labor rates, negotiations with outsource partners, vendors, it's a continuous activity to keep your costs regulated for your purpose. And then, as I said, whatever you can measure, you can manage. If you can't measure, you can't manage. So cost tracking and reporting is again one technique which every company uses. Take, for example, our own institution has come up with cost accounting standards, which helps us, recognize and record cost in such a way that we can track the expenses on a continuous basis. Or the cost audit rules also, the cost record rules also help us track and trace our costs in the best possible manner. So whether you use budgeting, standard costing, benchmarking, negotiations, etc., you will have to keep a close tab on your costs. And that's going to be really very, very important for you. Cost reduction, on the other hand, as I said, it's more to do with operational efficiencies and productivity, the focus of which is, of course, per unit cost reduction. You would have already learned concepts like value analysis, value engineering, process re-engineering. But some of the things over and above that you can try to basically adopt technology. You try and automate things will not only boost your productivity, efficiency, accuracy, but also will tend to reduce costs because of economies of scale. So robotics, for example, is quite modern that way. I mean, it's not as traditional as 4, 5, 6 decades ago. It is hardly last 20, 30 years where extensive use of robotics in complex business activities has taken shape. And it's increasing thanks to Industry 4.0, Industry 5.0 efforts. And when I talk about technology, I just don't mean the technicalities out of it, but even information technology is helping you a lot. So as I said, for cost control, when I said what you measure, you manage, here also information helps you measure things, track things, trace things. So information is like the kingpin of any modern business models. Outsourcing is one of the ways of cost reduction. You decide, for example, every business process, every business activity, you could measure it on 2 counts or analyze it on 2 counts. One, is that process strategically important to you? And second, is that process complex or easy for you? And then based on the combination, you could decide whether you should do that process in-house or outsource it. And that too, whether in-house or outsourced, you could always decide whether you can automate the entire process. One more aspect about cost reduction, friends, is the wastage reduction. Resource should be consumed to make products and not wasted. One of the modern techniques of waste reduction, I can tell you, you might have heard the concept of 3D printing. Normally, what we do is we take, let's say, steel bar and then cut or make a design out of a steel sheet by cutting whatever is unwanted, and that creates waste. In fact, 3D printing is an additive technology. You go on, building the product without having to cut the, material with which you are going to produce. So that will help you manage your waste and reduce your wastage to absolute minimum. Absolute minimum. So that's the technique which you need to know when we talk about cost reduction as such. So value analysis, value engineering, both of them aim at identifying activities that are low on value creation. So either you improve those activities or you just eliminate those activities. Process reengineering is like a radical rethinking of what you're doing and eliminate processes which are not required, which are not adding any value. And I've spoken enough about technology adoption, outsourcing, as well as waste reduction, where I gave you the example of 3D printing. Let's look at two specific cost control techniques today. And you will feel like, okay, at times you may feel okay, all these are the things that I know already. I am a qualified CMA and I have studied everything hard during my intermediate exam, during my final exam, but it's with a different approach that you may have to restudy all them or revise your knowledge in a slightly different way, because the questions are not going to be direct. They will test your interpretation capability to a great extent. Even the questions that are seemingly simple, they will be involving lengthy calculations, and time available is very, very limited. So, because we as students are always, very eager to start calculating things, and we are very good at that in general. But here, the exam will include simple questions which involve detailed, longer calculations, which will eat up a lot of time, and you don't have time at your disposal. So there will be difficult questions wherein you don't have to calculate anything, but your ability to interpret, connect various concepts together, and then come up with answers will be tested to the core. And it's from that angle that I will encourage you, or I'll recommend you to restart your readings and do a lot of question practice by creating multiple choice questions or objective type questions for yourself. There are loads of resources that are available on the internet also nowadays, so there is no dearth of resources for you. So whenever we talk about budgeting or budgetary control, budget is a yardstick. It's a limit that you set for yourself. And naturally, therefore, you have to manage your activities within that limit. And managing within limit is nothing but control of your costs. And therefore, we know that budget is a cost control technique, not a cost reduction technique. Now, this is the fact that you know, but if this comes to you as an objective type question in the exam, you may get a bit baffled. And that's why you have to be very careful, according to me. So let's look at budgets and budgetary control. What have you learned? I mean, you've learned the definitions, you learned the types of budget, you learned the process of setting up a budget, and then how the variances are monitored, etc., etc. All you have seen. So I'm not going to teach that as such at all. You know the types of budgets, master budget, functional budgets. So you tend to make the functional budget first and roll it up as a master budget for the entire organization. You know the flexible budgets, which will help you set up limits at various levels of activity that your organization may be actually trying to implement. ZBB, zero-based budgeting, you may have learned already, and somehow there is a misconception that we get from books or even from our study material that ZBB is generally used in government organizations. It's not so. It's equally applicable in the private sector organizations, manufacturing organizations, service organizations, project related organizations. Everywhere it's applicable. Simple concepts like incremental budgeting, rolling budgeting, you would have definitely learned. Activity based costing, you would have learned. But that concept can be extended to, bring you the activity based budgeting style also. So budgets are not directly prepared for a product or a service. They're prepared for each of the activities, and you will have to perform your activity within the limits set into an activity based budgeting. There are two parameters around which the entire activity based budgeting is set. That is the drivers of the cost. What drives your cost? So budgets are set for drivers. Number of batches to be produced, for example, the number of units of electricity consumed, for example. So budgets are set for those drivers, and you control those drivers, costs will automatically be controlled. Control drivers, naturally, you have a very strong hold on your consumption, and through that, it will help you to control your costs. So the process of budgetary control also was part and parcel of our intermediate as well as final examination. You establish budgets first, department wise, within the strategic objectives set by the organization. You then hold negotiations with divisions, departments, communicate with them, approve the budgeted limits, and then implement those budgets throughout the organization. Vis-a-vis, of course, you will try and measure your actual performance and monitor that in comparison with the budgeted limits. And you need to know how far your actual performance is going to deviate from your set budget limits. And that, of course, is referred to as variance analysis. Variance analysis is used in both these techniques, budgets as well as the standard costing. And therefore, even in the examination, you would find these two terms used interchangeably. Budgeted output, standard output, these concepts can be used intermediately. What's crucial is where our examinations stop, the work in real life starts. In the examinations, what you have been doing is you have been calculating the variances and then just saying whether it's favorable or adverse. For example, investigating the variance and interpreting the variance is very, very crucial. Very crucial. Why that deviation? Why favorable? Why adverse? If you calculate more than one variance, are the two variances connected together? Would it happen that if one is favorable, the other naturally will be adverse? Sorry. Can that happen? And in the real life scenario, modern CMAs will not need to calculate the variances, except, of course, for examination. So even in this Indian Cost Accounting Services exam, you may be asked to calculate variances, but more focus will be on interpretation there. And I will illustrate to you today through some of the objective type questions which I have included in my presentation. Because it is based on these investigations, interpretive capabilities, you will be able to initiate corrective actions. Without that, I mean, it's not the aim, of course, the objective is not just to calculate and be happy with that. It's the taking of corrective actions that's really more important for you all. And then providing, once the interpretation is done, you do the investigation, you need to provide that kind of a communication to those who are responsible to control or monitor it. the management, maybe operations management, middle level management, strategic management, the board level, whosoever it is. Our job is to feed them with enough information which is sort of self-explanatory. And therefore, two types of controls are very, very useful. And I don't know, of course, I mean, how much have you paid attention to learning of it? But we generally use the feedback control a lot as a concept. We don't really talk much about feed forward control. Feedback is good. I mean, there's no doubt about it. It's a type of a control where you monitor actual financial performance of the product or function or department with budgeted figures. So actual versus budget. So it's a sort of a postmortem. Feedback is always after an event has happened. What's more contributory, more beneficial for organizations of modern times is the feed forward control. And that's a very, very crucial concept for you to understand. Very useful in real life workplace for you all. So, in what way does it differ from feedback? As I said, feedback is provided after the events have already occurred. And that's why I said it's like postmortem. In feed forward control, however, what's done is instead of comparing actuals with the budget, you try and do a preventive control action, basing your comparison with forecasts rather than actuals. So whenever you implement budget, maybe at the start of the year, start of the quarter, start of the month, for that particular month, you anticipate some of the changes which you did not anticipate when the budgets were approved. But after having approved the budget, if the assumptions are no longer valid because of the changes in the business environment, you revise that forecast. I'm talking much more than flexing the budget. Please remember, flexing is just with respect to level of activity. But this is a factoring in of all anticipated changes and then compare them with the budget much before the actual performance occurs. So you try and give alerts, you try and give signals to the management, feeding forward rather than feeding back. And that's really very, very crucial for you all to understand. So establishing budgets, communicating, approving, implementing, monitoring, analyzing variances, interpreting them, investigating the causes for corrective actions. More crucial, according to me, is obviously the feedback and feed forward type of controls. Feedback is a traditional way of doing it. Feed forward is the new way of handling. Companies all over the world, the best Fortune 500 kind of companies, work a lot in getting their systems, their computer systems, their ERPs capable of handling feed forward controls as such. That's really very, very important for all of us. So whenever you try and revise your knowledge about budgets and budgetary control, try and uh, understand the new way of thinking that will help you, because it's this thinking that will help you attempt this examination with confidence. Examination is not going to be calculation oriented, number crunching. No, it's all going to be interpretive in nature. And let me show you these things in terms of your ability to think at this point in time. Let us see how do we do that. And therefore, I am putting some OTQs for your perusal right now. Let us see how we can connect to that. Let us try and answer these. So again, no numbers, but only testing our conceptual clarity. Which of the following statements is or are true regarding budgetary systems in the performance hierarchy? A completely different type of a question. Developing a new products in response to the changes in technology is a budgeting activity that would fall within operational planning and control. That's a statement. And second, budgetary systems at strategic planning levels look at the business as a whole and define the resource requirements. Now, which of these two statements is or are true? So you don't have to use your uh, general, syllabus related knowledge, which you might have got at the time of your CMA final studies, but a completely different thinking. First of all, understanding the question very well, and then try and answering. I encourage you people to, type your answers in the chat box in the meanwhile. Let me see how do you get these answers. Read it carefully. Please put your answers in the chat box. There are some 3-4 more questions which I'm going to put. So please make sure that you take this opportunity. There are 2 answers that have already come from Jayesh and Abhinav. Okay, let me wait for some more people. Yes, one more has answered, Raghupati. Yeah, some more answers have flown in, but let me take you through the answer. Yes, I think 2-3 students have correctly answered. Its correct answer is B. Performance hierarchy is a key word in the question statement. You know what is performance hierarchy? It's the strategic level, middle level, and then the operational level. That's the performance hierarchy. Those are key words. Now, first sentence talks about a company's developing new products in response to changes that are happening in technology. Now, this is an activity that you are developing a new product in response to change in technology. The statement says that this is a budgeting activity which would fall within operational planning and control. Obviously, new technology, new product has nothing to do with operational planning. It's all about strategic planning. Strategic planning. Second statement is, in fact, correct. Budgetary systems at strategic planning levels look at business as a whole. Strategic management looks not at each and every operation separately, but they look at a holistic picture, which is nothing but business as a whole. So therefore, correct answer is the option B. Only second statement is correct. The first statement is incorrect. Let us look at one more sample question. Which of the following statements are true regarding activity-based budgeting? The costs determined using activity-based costing are used as a basis for preparing budgets, activity-based budget. So that's the first sentence. And then the second is aim of activity-based budgeting is to control number of units output rather than the cost themselves. So which of them is or are correct? Answers are first is correct only, second is correct only, none of them are correct, or both of them are correct. So just think and put your answers again in the chat box. Sample question number 2. Two answers have flown in. Yeah, the third one also has come. Jay, Sunil, and Madhu. I'll just wait for a couple of more and then. Yeah, read those sentences very. Now, see, this is the difference between the questions that you generally get at uh, other exams and this particular exam. They will test your conceptual clarity to the core, absolutely to the core. And that's why you need to practice in a different way and revise your knowledge again in a different way. You might have scored very well, you might have got ranks, etc. All absolutely fantastic. But if the approach is different, you will need to adopt a new, learning pedagogy for that. So yeah, without spending more time, the correct answer here is A, of course. Second statement here is incorrect. When we discussed the ABB, I had told you that the aim is to control the drivers, not the output. So second statement is therefore incorrect. The correct answer is only first statement correct, which is A. Let us look at one more question. X company uses rolling budgeting. Now, this is one of the ways of budgeting, rolling, updating its budget on a quarterly basis. So the roll is done every quarterly. After carrying out last quarter's update to the cash budget, it projected a forecast cash deficit of $400,000 at the end of the year. Consequently, the planned purchase of new capital equipment has been postponed. Which of the following types of control is the sales manager's action example of? So what is the example? Forget about that amount. What is it showing? Is it showing a feed forward control, a negative feedback control, a positive feedback control, or a double loop feedback control? Rolling budget. So see, two concepts, two interconnected concepts are getting tested in one single question. One is a rolling budgeting, second is a feed forward or feedback kind of control mechanism. So you have to understand both of them in the best possible manner. There is no direct question here. I told you some time back that look, question can be asked by combining two concepts, and one may affect the other, as I said. So try and put your answers here. A couple of answers have flown in. Let me wait for some more to come, and then I'll clarify. Okay, some answers have flown in. Here, the correct answer is option A, feed forward control. Well, feed forward relates to making use of forecasts, not actuals. And here you can find it in the second sentence itself. You know that you are given the projected forecast deficit. So the manager here is using a forecast and not the actual. So when the forecast is used and not the actual, it is like feeding forward, giving a feed forward control, a signal to the management. So see, every word of the question is and the background information is very, very useful in answering. So you must be able to read the question very, very carefully. Let's go to one more question, and then we start talking about the other control tool. Now here, zero-based budgeting. The concept is zero-based budgeting. A definition of zero-based budgeting is set out below with two blank sections. So there are blanks left by the examiner. Zero-based budgeting, a method of budgeting which requires each cost element dash as if the activities to which the budget relates dash. So there are two blank spots. Which combination of the two phrases correctly completes the definition? So what should be the phrase in blank 1 and what should it be in blank 2? Read carefully and tell me what you could answer. Zero base. You might have learnt it, but unfortunately the way it is tested in CMA examination could be just, okay, write a short note on ZBB, which is not going to help you answer questions like this, because this requires comprehensive, in-depth understanding, conceptual clarity, etc. Without that, this is not possible. So please type in your answers. A couple of answers have flown in. I'll wait for some more to flow. Okay, let us look at the answer. It's a question about definition. Now, what happens generally if you remember our exams where they ask you, okay, define this term, and then you just rote learn and reproduce that answer. But here, unless you know the real meaning of zero-based budgeting, the answers won't be correct. In fact, the answers that have flown in have selected either B or D, where first blank says to be set at 0. Now, that's not correct. Not at all correct. Zero-based budgeting logic says that every expenditure that you plan to undertake in future period of time has to be justified, not set at 0. You don't set the number at 0, justify whatever figure you mention. That's the logic of zero-based budgeting. So both B and D are wrong answers because both of them blank. One says to be set at 0. No, it has to be justified. So either it has to be A or C. The A says to be justified, specifically justified, could be outsourced to external supplier. Not necessarily. You can still take the activity inside. Zero base is not compulsorily to be spent. Activity to be done by outsourcing. No. So therefore, the correct answer is C, where every amount you try to put it at the budget, every cost element will have to be specifically justified as if you're doing that for the first time. That's the zero base. Not putting the amount at 0. Please remember that very well. So what you would have noticed from these 3, 4, 5 questions is completely different way of questioning is going to be faced by you, and therefore your practice will have to be based on that. Let's go through standard costing, of course, and now standard costing is not complete without ton loads of formula. Although I am going to give you the formula in this presentation also, but we are not going to discuss that. I'll throw some light on some of the aspects of the formula, but we are not going to discuss the formulae more. But let us look at relationships, investigative analytics of the variances. When we talk about standard costing, of course, I'm not going to talk at length about how the standards are set or what's the process of standard costing as a control mechanism. But let's look at some of the aspects which will help you to re-establish these concepts in your mind. Setting standards, what standards do you set? You either set price standards or you set cost standards. You set standards for consumption volumes, and then you come up with a standard cost card. That's what we have learned already, and that's not incorrect. And we have also learned about the concept of standard costing. Once your standard cost cards are ready, you implement the standard costing system. So actuals again will be collected, measured and monitored through variance analysis. Investigations are done, corrective actions. Either the performance can be improved or standards can be improved. In modern days, let me tell you, unlike old economy days, standards are not valid for more time. They tend to fluctuate a lot. And that's a serious limitation for using this control mechanism nowadays. Budgetary control is more popular than standard costing, even if a company is engaged in manufacturing a standard product. Most of the products are customized. They do get changed according to customer needs. So standards say today may not be valid tomorrow. But of course, I mean, it does not mean that we rule out the applicability of this control mechanism totally in an industry. But the process remains the same. The process doesn't change. What's more crucial for us is to look at some of the variance analytics. Now, what are variances related to, and how do we do the analysis? Obviously, you have already learned a lot of formulae, a lot of sums you might have solved on sales variances, material cost variances, labor cost variances, overheads, both fixed as well as variable. And I know the challenges that we face in especially calculating the overhead variances. Material and labor are generally easy. But in real life, you are not going to calculate. The computer systems are there for you to calculate. So analyzing variances is a job of a professional like us. Because even the reports of comparing actual with standards, they will be given by the computer systems. But you need to get insights into the causes, why the deviations have happened, and then take corrective actions to improve your efficiencies, control your costs, and then therefore enhance your overall performance as such. As I said, I'll give you some of the formulae, but the aim is not really that. The aim is to make you aware of what you should look at when dealing with these variances. If you look for example at sales variances, look at, see again, the formula is known to you, I don't deny that. Sales variances naturally have nothing to do with production activity. It's only sales. So you need to consider always the quantity sold or to be sold. If you take the budget quantity, it is to be sold. What's more crucial is the word margin here. The margin will depend upon what costing system you are using, costing technique you are using. Are you using traditional absorption costing method, or you are using marginal costing method for control purposes at least? So if it is marginal costing that you use, the margin would mean contribution per unit. And if it is absorption costing that you are using, it would mean the profit per unit. That's crucial for you. And what are we trying to find out? Have we been able to sell a product at more or less than the budgeted or standard selling price? Did we sell less or more quantities than what we planned? That's what we actually try and check. So quantity sold is taken into account and not quantity produced. These variances obviously will be at product level. So they're separately calculated for each product. So if you say, okay, my total sales variance for the company as a whole is X, and let's say it is only $200 that you get the entire company variance. So you say it's only $200, let me forget it. But if the 2 million to $200 is like 2 million plus and 1.99800 million minus, both are big figures. So that means you will have to investigate. Only net amount is not going to help you decide. And then what you need to understand here as well is both price and volume variances could be interlinked together. For example, if you increase the price of a product over and above your standard, you will definitely get a positive sales price variance. But increasing price, if it is offset by your sales quantity, your sales volume variance may tend to be adverse because of fall in the sales volume. And this is exactly what you need to investigate. Investigation is all linked to that. Same case is obviously about the material variances. Price variance and usage variance again. Here also, please note, price variance is always to be calculated on purchased quantity, not consumed quantity, purchased quantity. That's crucial for you to remember. And examiner definitely can twist it. The quantity consumed is so and so, may be given, and you unfortunately calculate price variance for that. It's wrong because price variance is on quantum of material purchased. Again, these variances will have to be calculated separately for each item of material. Now, if you work for, let's say, a company engaged in automobile sector, and there are 60, 70,000 items that go into manufacturing of a car, should you calculate material price variance, material usage variance for every item? You have not studied that. Because in the in the books, in the study notes, in the exams, you would only know material A, B, C. There's one more technique that is involved here, and that is ABC analysis of inventory. So according to importance, only A category items you may choose to calculate the material price variances, material usage variances. And here, when you are trying to understand the amount of usage variance, you need to take into account the standard quantity per unit, of course, but for actual total production. Again, price variance, material price variance, and material usage variance may be linked together. If you purchase, and that can happen if one sees the behavioral aspects of managers, just to get a positive price variance, which again can be to the credit of procurement manager, he or she may procure substandard, sub-quality material. So naturally, you will get it cheap. As a result, you will get it in a positive, favorable price variance. But because the material is substandard, the production manager who is going to use it may require either more material, or more material may get wasted because of substandard nature of it. So naturally, that will get as an adverse material usage variance, which will be responsible for the production manager. Now, correct interpretation and correct investigation of the causes of favorable or adverse variance is what you should be looking at. And that's going to be really very important for you to analyze. Same is true about mix and yield variance. Material mix variance is, of course, used to monitor or control the cost of material. Looking at it, what sort of change of cost of material happens when you use the input materials in a particular mix. A standard cost card will always tell you what is the standard mix formula. If you use it in different proportions than what is mentioned in the standard, a mix variance is bound to get generated. Now, that again, when you're investigating, what's crucial to understand? If you use more of expensive material portion and less of a cheap material, the cost naturally will be higher, the mix variance will be adverse. Now, just a simple example, you are manufacturing a food item which has a recipe. In that, if you use more items which are expensive and less items which are cheap, the cost of material consumed will naturally increase because you have changed the mix. Mix variance will definitely go adverse. Similarly, yield variance measures efficiency of turning your inputs into outputs with some standard losses. If yield variance is adverse, naturally it will suggest that actual output is lower than what your standards show, than the expected output. And now that can be because of labor inefficiencies, because of whom the material gets wasted, higher wastage, or the material quality itself is inferior, causing again the manager to make use of a cheaper mix that reduces your yield. These two variances also are linked together. A favorable mix variance may lead to adverse yield variance. Try and understand these mechanics. That's definitely what is going to help you out in probing, being able to probe and investigate into why things have happened the way they are. And when the exam will put questions in terms of OTQ for you, they're not necessarily going to be always having you to calculate these variances, but like try and find out the interpretations and interrelationship between two or more variances as such. Labor variance, same thing, like material. Standard hours, when you consider, they are to be considered for actual output levels, especially when you are calculating the efficiency variance. Again, rate and efficiency are linked like material price and material usage. You know, employing more highly skilled people may mean negative rate variance, but because they are highly skilled, their productivity is better. It could result into a favorable efficiency variance. In reality, what you should look at, of course, friends, is who is held responsible for these variances. A lot of behavioral aspects will come into picture. Behavioral finance knowledge is therefore very, very useful for you. Overhead variances, again, same thing. Variable overheads, fixed overheads. I'm not, as I said, going to discuss this formally. I've just given it for the purpose of recalling them from your exam days, CMA exam days. What's more to do again when I say that you need to fix the responsibility of the variances. If you find that planning is done wrongly, can you hold operational manager responsible for that? No, a planner has to be held responsible for that. And therefore, in modern days, apart from the traditional variances that we looked at, couple of more variances are always considered: planning variances and operational variances. Because if planning is done wrongly, the planner should be held responsible, not the operational manager. And the fact that the difference or deviation between standard and actual can arise either due to bad planning or unrealistic planning, and not solely due to rate variance or usage variance as such. So whenever modern companies try and calculate the variances, they do differentiate between planning and operational variances so that the responsibilities can be fixed on the correct function. Planning variance is, of course, will be comparison of the original flex budget versus the revised flex budget to find out planning error for which planner is responsible. And the operational variances will always be calculated with respect to the revised flex budget, not the original flex budget, because that's the wrong reference point now. That's what you need to keep in mind. These variances can be calculated for sales. These variances can be calculated for material cost and labor cost also. So based on our understanding of variance analysis, let us look at some typical questions. Again, no calculations I'm going to ask, but questions that will test your conceptual clarity. Let us see how we can solve these. There are 4 or 5 questions. First one, which of the following statements is or are true regarding material mix variance? First sentence, a favorable total mix variance would suggest that a higher proportion of cheaper material is being used instead of more expensive one. And second statement, a favorable total mix variance will usually result in a favorable yield variance. Either first one is correct, second one is correct, both are correct, none of them are correct. That's the option. Now, this kind of question will not ask you to calculate, but will test your knowledge, will test you on understanding of the concept of mix variance. First statement says a favorable mix variance would mean you're using more cheaper material than a more expensive one. Is this statement correct? Or a favorable mix variance will result into favorable yield variance. Is that statement correct? Please type in your answers in the chat box. Two answers have flown in. I'll wait for some more. Yeah, some questions have flown in. Some answers, sorry, have flown in. Let me check. Yes, the correct answer is statement 1 is correct, which is selection of option A. Naturally, a favorable mix variance will occur if you're using higher proportion of cheap material. When cheap material, by cheap material you mean the cost of that material is lower than the standard. Naturally, it will be a favorable variance. Second sentence is in fact wrong because a favorable mix variance is more likely to create a negative or adverse material yield variance and not a favorable yield variance. So the option A is correct. This is interpretation. This is interpretation. Let's look at another question. A company has higher than expected staff turnover, and as a result, staff are less experienced than expected. As an indirect result of this, are the labor rate variance and material usage variance likely to be adverse or favorable? So see how information is given. They're neither giving you, okay, so many hours, so much of quantity, so this is the rate, this, that. No, it's all interpretation that matters. Company has higher than expected staff turnover. And as a result, the staff who remain, of course, are less experienced than expected. Now they're trying to link it to two types of variances. One is labor rate, other is material usage, and asking us whether they are likely to be adverse or favorable. This is all going to be interpretive capability. Yes, one answer has flown in just now. 2, 3. Yeah, right. The correct answer again here is C. Labor rate is going to be favorable and material usage is likely to be, because likely is what is the word used in the exam question here. Likely to be adverse or favorable. So rate is likely to be favorable and material usage is likely to be adverse. Of course, less experienced staff, naturally, they will be paid at a rate lower than what the good staff would be. So it will turn out to be a favorable rate variance. Okay. Usage of material is likely to be unfavorable because less skilled, less experienced staff is going to make use of that material. So there could be higher rejections, reworkings, defects, leading to negative or adverse usage variance. So this is how we need to interpret it. Let's look at one more. A company is obliged to buy substandard material at lower than standard price because nothing else is available. As an indirect result of this purchase, are the material usage variance and labor efficiency variances likely to be adverse or favorable? Type in your answers, please. Material usage and labor efficiency. Couple of answers have come in. Yeah, a careful reading will tell you the correct option is option D. Both are likely to be adverse. The first sentence itself says you are obliged to buy substandard material, which would mean the usage variance will be adverse. In fact, material rate variance will be favorable because it is bought at lower than standard price. But we are asked about usage variance. So that is likely to be adverse. And because the material is substandard, the uh, labor may have to spend more time because there may be some rejected items. And that's likely to again would mean that labor efficiency will be lower. One more we'll try. Yeah, this one. Under absorption costing, sales volume variance is calculated by multiplying the difference in the sales volume by which of the following? Standard contribution per unit, standard cost per unit, standard profit per unit, standard selling price per unit. We are talking about sales volume variance. Volume variance, not sales price variance, sales volume variance. So just type in the answers. Couple of answers have come in. Yes, the correct answer here is option C. See, again, if you're not asked to calculate, you tend to forget things. Absorption costing, it has to be standard profit per unit. Had it been marginal costing, we would have said standard contribution per unit. Because we are calculating sales related variances, option B has no relevance because it says standard cost. And standard selling price is also not correct because we are not calculating price variance. We are calculating volume variance, which provides us with insights into profit. So therefore, answer or option C is the correct answer. Well, what we have seen so far, two concepts, two traditional cost control concepts, and some questions related there too. What I want to tell you in the end, of course, is a sort of a learning pedagogy that you should use to take exams like this Indian Cost Accounting Service, all OTQ based. So understand the type of objective type question. Some question could be simple knowledge testing. So what do you have to do? Just recall what you have learned. Make sure that your foundation is strong. You practice a lot. But if there is question which makes you apply your critical thinking, then you need to, be able to reflect on that part of application of the knowledge and have capability of, connecting concepts, which we have exhibited in some of the questions just now. You must make sure that every possible wording, verbs used, key terms, concepts which are getting tested. If you don't read the question carefully, you may make a error unnecessarily. Negative marking is there. There is one methodology which you can use. From the options that are given, identify which ones are irrelevant and eliminate those wrong options first. This will narrow down your choice. Like I said in the last session, calculating sales related. So cost is irrelevant. We removed both the options where cost was mentioned. And because it was not material price variance, we removed selling price. So that narrowed down to only one. That's one of the way of answering an MCQ. Of course, it may happen that once you start reading the options, or the first or second option may seem correct to you, and you directly jump on that answer. Don't do that unless, of course, you make sure that other options are considered by you. You may reject them, but consider all options. Words like always, never, only, except, likely, that was used in one or two questions just now. Very important. Or sometimes negatives are used. Which one of the following is not true? Is like saying, okay, which one of the following is false? So carefully read this and make sure that you come up with your correct answers. Let me tell you, for uh, this examination, syllabus definitely is very vast. You have cleared CMA examination, so you have reached one level definitely. But make sure that you revise all your concepts. Make sure that you relearn them uh, in order for you to understand the crux and be able to apply that knowledge eh, in even the tricky questions that may be asked to you. So that's it from my side. We have about 15-20 minutes remaining. If there are questions, I'm happy to take that. If you have questions, either unmute yourself and ask, or you can type the question in the chat box. Yeah, if there are no questions, then I think, yeah, this question, are study material is sufficient? Yes, it is sufficient because it covers all the parts of the syllabus, no doubt about it. But as I said, what you need to do is to prepare slightly differently. Look at the 360-degree view of the concept. Try and relate two concepts together to understand if the two put together could come up, bring up something different, increase your interpretive capability. Don't focus only on calculations because there will be difficult questions and there are negative marks. So you will have to be careful. But resources wise, our study material is definitely more than enough. Because most of the syllabus areas are taken from our paper number 15, strategic cost management. In real life, yeah, nowadays ABC is gaining popularity, Jayesh. But standard costing, as I said, is not yet completely out of fashion. Some companies still make use of standard costing. Manufacturing organizations mainly, not service organizations, because services are never standard. Exam schedule will be notified, Madhu. Definitely, you will directly get, once you are a registered student, you'll directly get into your email the exam schedule. And if possible, WRC also can communicate with you once it receives the exam schedule. Okay, fine. I think that's it from my side. I wish you all the very best for your preparations. I will be sharing my presentation file with WRC with a request to them to
Yes, sir.
circulate it to everyone. So thank you
Yes.
from my side, and I hand over it now to the administration. Thank you.
Thank you, sir. Any questions? Since sir, there is no question, then we will conclude the
Yeah,
session, sir.
thank you. Thank you.
Thank you,
Thank
sir.
you very much.
Thank you
Bye.
for the wonderful session. Thanks.
Thank you
Okay.
so much. Bye.
Good night.
Good night.